Good morning and welcome to Managerial Accounting. As we look at the calendar for February, you can see we have one item due today, and that is the Chapter 18 exercises. So I expect to get through the exercises today. Some of these are much shorter than others. So I'm still hoping and planning to get through them today. If not, we will make adjustments as necessary at the end of class. But for now, we'll assume that we'll be on track at the end of class today for finishing Chapter 18. And so that means that the Chapter 18 problem would be due on Thursday. I wouldn't anticipate that changing even if we push the exercises, because we will have done enough of the exercises that we'll have covered that problem. And on Thursday, we will begin Chapter 19. And so you should submit for grading the Chapter 19 pre-quiz by the end of the day on Thursday. Chapter 19 is not on the exam. So looking ahead, you should be planning to take the exam at some point this weekend, as soon as you finish the Chapter 18 problem. And so that can be taken at any time, but should be submitted for grading no later than Sunday the 20th by the end of the day. If it works for you to take the exam tomorrow, that's perfectly fine. Officially, the exam window is Thursday through Sunday as usual, but you're always welcome to take it early if you've done the work and you're ready to take the exam and that works better for you. Chapter 19, as I said, will be starting on Thursday and that's not on the exam. Also a reminder as we look ahead to next week, there are no JCC classes Monday or Tuesday. Monday is President's Day, and so that is a holiday. Tuesday is Faculty Development Day, so we will be working, but you all won't have class. And I'm pretty sure I said this in an earlier class when we talked about this, but just keep in mind if you have an asynchronous online class, you could still have things due on those days, even though you wouldn't have an actual Zoom or face-to-face class on either of those days. So for this class, we'll start Chapter 19 on Thursday and finish it next Thursday, the 24th. Looking ahead then to March 8th. I know that's a couple weeks away, but people may be looking at this. You'll notice on March 8th, we have our second step for the project due. And so I just want to spend a minute talking about that. It is not a challenging part of the project, but I want you to be looking for sources to make sure that you're going to be able to find the information that you need to do your project. So I'm going to look at that just for a moment. We go into the annual report project area in Blackboard. You'll notice the drop box that says step 2, that's what's due March 8th, preliminary research for the project. This is worth 15 points. And so what you need to do, and it explains right here, you need to find 3 sources. One of them is going to be the company. 2 of them need to be additional sources beyond your company. So do not give me 2 separate web pages of your company as 2 different sources. That counts as just 1. The other 2 must be external sources. So they might be newspaper, magazine, journal articles about your company, about the industry in which your company operates. All you need for this step in the project, don't worry about formatting of citations. I don't care if you use APA or MLA or neither of those. I'm not teaching that to you. English 1530 is not a requirement for this course. I assume everybody at this point understands about citations, but for my purposes, really all you need is a link if you're using an internet source, which almost all of you will for everything. So just having a link to your source is fine. And then a brief description of how what you find there is going to help with the project. So what I would suggest is you look at the it is. No, the instructions for the project. What do we need to know for this project? Okay, where am I going to find that? Much of it is going to come from the company's website, from their annual report. But again, you may find information about your industry or an article about something that's going on with your company specifically that is helpful. So you need to have 3 sources, a link to each one, and a couple sentences about each one. Here's the information that I'm finding there. It's going to help me on part 3 of the project or whatever. JP.
So is this annual report going to be more like essay or more like writing information?
It's going to be more like an essay, more like a paper that you're writing. Yep. Yeah, so for those of you who had me for financial accounting, and we did the kind of mini projects throughout that course, in financial accounting, I said, you don't need to worry about sentence, it doesn't have to be in paragraph form, full sentences. You don't have to restate the question. You can just say chapter 1, question 1, 2, 3, 4, 5, 6, answer the question. For this project, it is a report that you're writing. It is a paper. And so it should mostly be in full sentence form, paragraph form. You're going to have calculations for the last part of the project, the financial analysis part, and you're going to show those calculations. And so that doesn't need to be in paragraph form, but it should be more of a formal report than what we did in financial accounting. So please keep that in mind. But what I really don't want to read is something that says like this. Let me just pull up the instructions. But I'm not saying you would lose points for this. I'm just saying it will be really tedious for me to read it. So here's the first part, step 3 here is the actual report itself that's due about week 10 of the semester. And you can see in part A, the first part of your project is the introduction. And you can see these 7 bullet pointed items that need to be included. What I really do not want to read is the name of the chief executive officer is, the location of the home office is, the ending date of the is. If you're going to do it like that, please just use bullet points for the introduction. It'll save me a lot of grief. But you can weave this into a narrative. And you can answer more than one question in the same sentence. So just make sure that you are answering every question that is asked. And yes, it's definitely going to include at least some narrative report writing part. Okay, any other questions about step 2? Again, that's coming up due March 8th. It won't take you more than 10 minutes to find those sources. The whole reason that I add that intermediate step, because I did not used to have that part in there, is it will help you to determine up front, you know what, I can't find any information about this company. I can't find what I need. Maybe I should change my company. And for some of you, you'll get started finding the sources and you'll look at the instructions for the project and say, you know what, I think I'll just work on the project now. I don't have anything else big going on in my other classes. I'm just going to get through this. As I said, the first week of the semester, there is not one single thing that we are learning this semester that you need to be able to do the project. Everything that you need to be able to do the project, we already learned in financial accounting, basically. So this is just kind of pulling everything together. So any other questions about the project or what to do? Right, so one of the sources, the 3 sources, one is going to be the company's website. That's where you'll find their annual report. You'll find some additional information about their plans and so on. And yes, 2 other sources that could be newspaper, magazine, journal. It could be just another website that does financial stuff that talks about your company's industry or specifically about your company and some changes they have coming. So. Anything else? Okay, so let's go to the chapter 18, we do have our work cut out for us to get through this today, but we'll do the best we can. I have my fingers crossed. We're going to start with exercise 3. So this is chapter 18, exercise 3. I had suggested that you try this at home, and there was a question about it. So we're going to go through this together. I might go through it a little bit more quickly than I otherwise would because I asked you to try it on your own. But please, if you have questions or if I'm going too quickly, just stop me. So this is where we are with activity-based costing. We haven't really looked at activity-based costing yet. We were contrasting that with, in exercise 1, the traditional approach, a single plant-wide factory overhead rate. Then in exercise 2, we said, okay, what if we divide this into multiple production departments and have a separate rate for each of those? And then in exercise 3 that we're about to start, we are going to look at, for one single company, we're going to look at what would it look like if we used a single rate versus a multiple production department rate. Then in exercise 4, we'll get into the activity-based costing, where we're dividing up our costs based on activities that may span multiple departments, as opposed to accounting for each department separately, where we might be doing multiple activities within that same department. So it's just a different approach. The approach that we use, single plant-wide, multiple production department, or activity-based costing, does not in and of itself change the total costs. Okay? So choosing one of these 3 approaches does not change the total cost. What it does is change how we divide them up, how we allocate them to specific products. And so it might allow us to have a better sense of where our costs are coming from. And that ideally would lead to better control of those costs when we really understand where they're coming from. So in exercise 3, it says, Eclipse Motor Company manufactures 2 types of specialty electric motors, a commercial motor and a residential motor, through 2 production departments, assembly and testing. Presently, the company uses a single plant-wide factory overhead rate for allocating factory overhead to the 2 products. However, management is considering using the multiple production department factory overhead rate method. The following factory overhead was budgeted for Eclipse. You can see a total of $1,080,000 split between the 2 departments, and they're using direct machine hours as their allocation base. And the budget for machine hours is $9,000. So the first thing we're asked to do in part A is determine what the per unit factory overhead would be under the single plant-wide factory overhead rate method, using direct machine hours as the allocation base. So we have that 3-step approach that you have in the chapter 16 reference materials folder in Blackboard. And using that approach, we would calculate in advance the single factory overhead rate by taking the budgeted overhead, $1,080,000, and dividing by the budgeted level of the cost driver. And so what I found was we would allocate $120 per direct machine hour to all of our products, commercial and residential, for both assembly and testing. So we'd be assigning the same cost to assembly and testing, even though the budget for assembly is much lower than testing. You can see assembly has almost as many, about 80% of the hours of testing, but their budget is nowhere near 80%. So by allocating the same cost per direct machine hour to assembly and to testing, it might be skewing our results. And so looking at part A, using this $120 per direct machine hour, the commercial, I can't remember what we're making. Oh, electric motors. The commercial motors take 8 direct machine hours. So 8 direct machine hours at $120 per hour would be a total of $960 per unit. Again, 8 machine hours at $120 per hour. And so for residential, same $120 per hour for 4.5 hours, we would be allocating $540, excuse me, $540 to the residential motors. So that's the approach that we learned in chapter 16. Any questions about that? So we looked at the entire budget for overhead and the entire budget for direct machine hours. And we calculated one rate. That's the $120 per hour that we calculated here. What we're going to, does that make sense? Okay. So what we're going to do next is look at assembly and test separately. And so for assembly, and I'll put, I can get my annotate up here. I'll put these right here and hopefully maybe I'll move it over a little bit so I won't squish it when we scroll down. But for assembly, for part B, we're going to look at these separately. And so for assembly, our budget is $280,000, and that is for 4,000 hours. And so that is a cost of $70 per direct machine hour. And for testing, as we already pointed out, their budget is much higher compared to their hours. And so the cost for testing is much higher than it is for assembly per direct machine hour. We knew that was going to be the case because we can see that as we just look at the budgets here. Is everyone okay with where those numbers are coming from?
Yep.
Okay. So we scroll down, hopefully don't run too much into the writing on the screen. Try to get this positioned there, that's nice. So if we look at the table of information here about commercial motors and residential motors. So the commercial motors take 3 times as many hours in testing as they do in assembly, where the residential motors take twice as many hours in assembly as they do in testing. Well, we know testing is a lot more expensive than assembly. And so the commercial motors should be getting a lot more of that cost because they take a lot more time. Under the first approach here in part A, yes, we allocated more overhead to the commercial motors than we did residential, but that was because they just take almost twice as much time, 8 hours versus 4.5 hours. Now for part B, when we look at each department separately, we're really going to see that the cost for commercial motors is going to go up substantially, and the cost for residential motors is actually going to come down. So let's go ahead and do that math, and then we can talk about it a little bit more. So for a commercial motor, we're going to be allocating assembly and testing separately. So assembly for a commercial motor is 2 hours, and we're going to be charging them $70 per hour. For the testing department, they have 6 hours, and we're going to be charging them $160 per hour. And so, based on that math, $1,100 per, whoops, one more zero, $1,100 per unit we would now, under the 2-department approach, we would assign $1,100 per unit to the commercial units. And as I said, we know that the residential motors are going to go down in cost. 3 hours at $70 per hour plus just 1.5 of the more expensive, $160 testing hours. And I got $450 per unit. So when we use the 2 departments, we are getting more accurate costs. As I explained up front, the total costs don't change. We're still going to be allocating the full $1,080,000, but the way we allocate it, the way we split it, in this case between the commercial and residential motors, has shifted. The reason that's important is because it allows us to more accurately price our product, to more accurately recognize the profitability of our product. And because we recognize that the commercial motors are actually costing more than we thought they were under the one department or single plant-wide approach, it can help us to try to limit or reduce some of those costs. Hey, you know what? We're spending 6 hours testing these commercial motors. Is that really necessary, or should we be reducing those, trying to reduce those hours? Knowing where our costs are coming from, and you'll hear this theme come up over and over throughout this semester. Recognizing where the costs are coming from is the first step to being able to control them. Because if we don't know, if we don't recognize the reason the commercial motors are much more expensive to produce than the residential motors is not just because they take more hours in total, but they're taking more hours of the more expensive process, which is testing. Does that make sense? So then we need to, whoops, is it okay if I clear the writing off the screen? Is everybody okay with those?
Yep.
So recommend to management a product costing approach based on what we just went through. So I would say that the answer is number 1, they should consider multiple production department factory overhead rate methods. That's far too many words, because it allows them to cost the product more accurately. Make sure that they're pricing the product to their customers more accurately as well. And as I already mentioned, helps us to know how to control those costs when we recognize where the true costs are coming from. Does not change the total cost. It just changed the split or the allocation of those costs between the 2 separate products. Everybody okay with that?
Yes.
Okay. Let's keep going then. And in the interest of time, I am going to ask you to do this exercise on your own, but I'm going to talk about it for just a moment. This is one of those exercises that comes down to really a multiple choice question. So I'm confident you can do this on your own, but this is going to be our segue into activity-based costing, where we look at not just departments of manufacturing like we did in the last one, the testing and the, what was the other one? Can't even remember now. Testing and assembly, but also instead of looking at just those production departments, we're looking at a lot of the support activities that happen in our manufacturing business. And we're going to allocate the cost of those rather than throwing them all into that big traditional manufacturing overhead cost pool. We're going to divide them individually. We'll have a separate rate for each one, and we will directly trace these costs to specific products or specific activities rather than having one overhead cost pool, one allocation rate. As we've said multiple times already, the whole point of this is that it helps us recognize where our costs are coming from to make sure that we are controlling those costs as much as possible and properly pricing our product. So just as an example, what we're asked to do is look at each activity that has been identified. Well, how do they identify these activities? They watch what's happening. They do a kind of a time and motion study to determine, what activities go into producing this product. And for each one of them, based on the results of that intensive time and motion study that they're doing, they will decide, how are we going to allocate that? What makes those costs be higher or lower? And so we'll start with the cafeteria. What would make sense to allocate the cost of the cafeteria? Well, I would think it would make sense to base it on, well, how many people are using it? So departments that have more employees are going to be allocated more of that cost because they're using it more, because they have more people. Materials handling. Well, what would be an appropriate way to allocate that? Well, how much material are we actually moving it? How many moves do we have? So products that take more moves of material should be allocated more of the cost of handling the material. Payroll, probably based on number of employees or maybe number of payroll checks processed. It's probably the same thing. Purchasing, maybe the number of purchase orders. So again, I'm going to ask you to complete this exercise on your own. Oops. But you can see that if you make an inappropriate selection, it's going to mark that for you and you can adjust that as needed. Of course, if you finish this exercise and have questions about it, you can always ask. And just a reminder, you can use those items more than once or not at all. Any questions about that though? It's just to kind of get you thinking about how we might allocate the cost of those activities. And you can see that that's different than allocating costs directly to a specific department or work cell. But instead, we're looking at activities that might benefit or be used by multiple work cells. One moment here. Okay. So let's move on to exercise 5 if there aren't any questions. As I suggested, some of these exercises are much shorter than others, and so I am still hopeful that we will finish up chapter 18 today. Exercise 5 says product cost using activity rates. Nuzama.com Incorporated sells consumer electronics over the internet. For the next period, the budgeted cost of the sales order processing activity, so they've identified one activity, they've traced cost to that specific activity, and the budgeted cost for processing sales orders is $250,000, and they expect to process 50,000 sales orders. The first thing we're asked to do then is determine the activity rate of that sales order processing activity. So how much are we going to charge per sales order? It's $250,000 total, and that's for 50,000 orders. We would be charging $5 per sales order. So why is that significant? Well, maybe some products tend to be ordered in groups of 5,000 and some get ordered one at a time. If you take an order for 5,000 pieces, that's one order, you have to process it one time. If you take an order for one piece, it's one order, you have to process it one time. What they're recognizing here is it's not really the number of units that are purchased, it's the number of orders that have to be processed. And so we're going to allocate those costs based on the number of orders. And appropriately, we will charge more cost to products when they're ordered in smaller quantities. Part B says determine the amount of sales order processing cost associated with 30,000 sales orders. So 30,000 orders at $5 each. We would allocate $150,000. Any questions on that? So just to point out, and I know I kind of alluded to this maybe last class, why did we go through the traditional approach of, for 2 chapters, the traditional approach of allocating overhead? And now we're saying, yeah, but that might not be the best way to do this. So why did we bother doing that at all? The way I've been describing this and talking about the time and motion and all of the extra work that goes into even just setting these up front is not worth it if it doesn't give us a better sense of our true costs. And so, as I said in an earlier class, if we're only making one product, we don't need to go through this extra work because we know all of that cost belongs to that one product. We would not ever want to add more work if it doesn't add value for our business. It takes more work up front to set up these activity rates, but it's not done there because every single product you make, if we're using activity-based costing, is going to have multiple activities assigning or tracing cost to that product. So it's more work at every step of the process. We would only do that if we end up with more meaningful results, information that helps us to make better decisions. Same thing we talked about all through financial accounting. The whole purpose of what we're doing here is to give decision makers the information they need to make the best decision possible. And it's possible that that information is the simplest form, the traditional approach, one single overhead pool, one cost driver. How do we know that? Well, we have to take a look at what we're doing and determine, does it really make sense to go through this extra work up front to get the system set up, and then to actually do the additional extra steps in the accounting process. And only if it's worth it should we take those extra steps. Any questions at this point? So let's move on then to exercise 6. Lonsdale Incorporated manufactures entry and dining room lighting fixtures. 5 activities are used in manufacturing the fixtures. You can see these activities here: casting, assembly, inspecting, setup, and materials handling. We have the budgeted cost for each of those activities, and we're told how are they going to be allocated. Corporate records were obtained to estimate the amount of activity to be used by the 2 products, the estimated activity-based usage quantities, and the units produced follow. So we have the total for each one of the activity bases, and then how it's going to be split or allocated between the 2. And I just want to point out in this exercise, we have 2 separate products and 5 different activities. How many companies do you think make only 2 products? How many companies have maybe only these 5 activities? So even though this seems, and is, more complicated than what we've been doing since chapter 16, it's still a pretty simplistic example. So I hope that you're getting the idea that we would only want to go through this extra step, these extra steps, the extra work associated, if it actually gives us meaningful results. Results that are materially different than if we didn't bother with all of this. Let me see how much room I have down here. Okay, so I'm going to put my calculations over here on the right-hand side in this big white open space because I won't need that once we scroll down. So what we're going to be doing then is calculating for each one of the activity bases, we're going to be calculating the cost. I need to, hang on 1 second. Move that out of the way. So we're going to calculate the cost for each one of the 5 activities that are listed up here. I've got this positioned about exactly as best I can. So we'll start with casting, the casting activity. A little more room here. So activity rates. And we're starting with the casting department. Oops. We are told that the casting department is expected or budgeted to cost us $570,000. And we're going to allocate those costs based on machine hours. Well, in the table directly to the left of where I'm writing, we are expected to use 19,000 machine hours. I'm going to be putting this number in when we scroll down. These are what we're doing right now are the answers to part A. So we take, it's very similar to the formula that we talked about for the traditional approach, only we're looking at each activity separately. We're still looking at the total budgeted cost for that activity and the total budgeted level of the cost driver. For casting, it's machine hours, and we expect to work 19,000 machine hours. So make sure you're using the totals, not how much is going to be used for the individual products, entry and dining lighting. Those numbers, the 6,000 and 13,000, we will use to split the total $570,000 between the two. But to find the rate, the allocation or activity rate that we're going to use, you use the totals. Hopefully that's clear. So $570,000 divided by 19,000 machine hours is a rate of $30 per machine hour. Give myself just a little more room here. Everybody okay with that? How about assembly? For assembly, we have a budget of $80,000. We're allocating that based on direct labor hours. We can see that up at the top of the screen. And we are expecting to work 5,000 direct labor hours. So that is an allocation rate of $16 per direct labor hour for the assembly cost. I am going to pause the recording at this point and ask you to do the calculations for inspecting, setup, and materials handling. I'm going to do those on the screen myself. And then once you have those 3 calculated, you can enter them in part A. You can use the check my work and then restart the video and we'll pick up from there. Okay, so I have found all of those activity rates and I'm showing the calculations there on the right-hand side. If you have any questions on those. Okay. So now what we're going to do, and I'm going to scroll down. I don't think I can fit everything on the screen, but we'll go with what we can see there. I'm going to use this white space up at the top to accumulate our costs. And so we're going to be calculating the total cost for entry and for dining. And we're going to be assigning cost to each one of the activities. We'll start with the casting, which is going to be allocated based on machine hours. And on your screen, hopefully you can see that the machine hours for entry lighting is 6,000. So 6,000 machine hours at $30 per machine hour is $180,000 total for the entry machining. And for the dining lighting, it's 13,000 machine hours at $30 per. Try it again. 13,000 machine hours at $30 each is a total of 390,000. If you were to add those two together, the 390 and the 180 is the total of 570,000 that we had budgeted to spend for casting. So we have completely allocated the cost of the casting activity to the two separate lights based on the number of machine hours used for each one of them. Make sense? Let's do the next. Go ahead.
I have a question real quick. So for the entry, did 6,000 times what?
Times the $30 per machine hour that we had calculated here.
Okay. Thank you.
Yep. Let's do one more together. And let's look at assembly because that happens to be next. So the costs of assembly are going to be allocated based on the number of direct labor hours. And we're going to be allocating $16 per direct labor hour. So the entry lights are expected to take 3,000 direct labor hours. 3,000 hours at $16 per hour would be $48,000. And then the dining lights are expected to take 2,000 hours for a total of 32,000. Again, if you add those two together, you can see that the total is the $80,000 that we expected to spend, or we do expect to spend on assembly. Everybody okay with what we're doing here? Okay. So again, I'm going to pause the recording and let you do the next three activities: inspection, setup, and materials handling, and then restart your recording. You can go ahead and total those two. The 5 activities for each of the 2 lights. That's going to give you your answer for right here, total activity cost, and then restart your recording once you get to that point, please. Okay, so after assigning the costs for each of the 5 activities to each of the 2 products, I ended up with these totals: $287,250 for entry lighting, $466,500 for dining, and then I entered these down here in part B. The last, the last step then is to calculate the activity cost per unit. So for each one of the entry lights, how much are we assigning in total for casting, assembly, inspection, setup, and materials? This final line in the given information tells us how many units we expect to produce. 6,000 entry lights. So if the total activity cost for entry lights is $287,250, and that's for 6,000 units, that works out to be, and it tells us to round the per unit amounts to the nearest cent. So $47.88. It's 47.875, so I'm going to round that up to 47.88.
I'm sorry, you did 6,000 divided by what?
I did this, that's fine. This total, or this total right here, 287,250, divided by the 6,000 lights, entry lights that we expect to produce. So 287,250 divided by 6,000. And then for the dining room lighting fixtures, we're going to do the same thing. Take the total activity cost, 466,500, and divide by the units we expect to produce, and that's just 3,000. And a total of $155.50 for the 5 separate activities for the dining room light fixtures. Keep in mind, these are the activities made that we use to make the light. So this does not include the direct materials that are involved there. And it may not include the direct labor. It might include the direct labor costs. It might or it might not. So I know we're allocating assembly based on direct labor hours, but this $80,000 cost might be the overhead for assembly. It might not be the actual direct labor cost. If we worked for this company, we would know what's included in there. But my sense is that these are just the overhead costs, not the direct labor costs specifically for the light, for each light. So let's get our green check marks in there. Any questions before we move on?
I use Excel pretty smoothly.
Yeah, I would.
It's kind of my default when I have to keep track of a bunch of numbers. I know.
Yeah. So if you can't hear what's being said in the classroom, if you can't hear that on Zoom, someone in the classroom is saying that he used Excel in order to set up these numbers and kind of keep track of things, which is absolutely fine. We saw in the last chapter how helpful that can be to be using that kind of a template, but even just using Excel to show your calculations is probably easier than what I'm doing here on the screen. So I would encourage you to use any of those resources like that, if that helps you to do the calculations. One of the advantages, of course, would be that you can put in one formula and just pull it down and not have to keep entering those formulas every time.
The sum above is nice too.
Mm-hmm. Yeah. Yep. Okay. Questions, anybody? All right, well, let's keep going. Don't want to go more quickly than makes sense to do, but we are moving right along, which is good to keep us on track. Let's look at exercise 7. So as I've been kind of trying to hammer home, we only go through all of this extra work if it gives us a better sense of our costs. If the end result is a product that is costed more correctly, more completely, than if we just use the traditional approach of one overhead cost pool, one overhead cost driver. And so in this exercise, exercise 7, we're going to be looking at that product cost distortion and see what that might look like. Handbrain Incorporated is considering a change to activity-based product costing. The company produces 2 products, cell phones and tablet PCs, in a single production department. The production department is estimated to require 2,000 direct labor hours. The total indirect labor is budgeted to be $200,000. Time records from indirect labor employees reveal that they spent 30% of their time setting up production runs and 70% of their time supporting actual production. The following information about cell phones and tablet PCs was determined from the corporate record. So we have number of setups, number of direct labor hours. You can see the direct labor hours are the same between the two. We're producing the same number of units of each one. They take the same amount of direct labor time, but the tablet PCs require more than twice as many setups. So the first thing we're asked to do is determine the indirect labor cost per unit allocated to cell phones and tablet PCs under a single plant-wide factory overhead rate if we use direct labor hours as the allocation base. So if we took the total cost for indirect labor right here, budgeted to be $200,000, and we split it between the cell phones and tablet PCs based on direct labor hours, that means each one would get half, right? Same direct labor hours, same cost, $100,000 per product. I should probably put this on the screen. Oops. This back up here. Okay. So if we were to use just one overhead rate, we would take the $200,000 for indirect labor, divide it by the estimated level of the cost driver. If the cost driver is direct labor hours, that would be 2,000 hours. And so we would be allocating $100 per direct labor hour, right? $100 per direct labor hour. How many direct labor hours does it take per unit? Well, we aren't given that exact information, but we're going to figure that out. They're going to use 1,000 direct labor hours to produce 80,000 units. $1,000 divided by 80,000. We're not room here. So it's going to take that 0.0125 direct labor hours per unit. It's going to take 1,000 direct labor hours to make 80,000 units. That's equivalent to 0.0125 direct labor hours per unit. And we're going to bill $100 per direct labor hour. So I shouldn't say bill, that's probably not the right word. We're going to allocate or assign $100 per direct labor hour. And it's going to take 0.0125 direct labor hours per unit. So 0.0125 direct labor hours per unit times $100. That's $1.25 per unit. $1.25 per unit. Excuse me. We're still waiting for SUNY to determine unmasking guidelines. Pretty excited for that to happen. They make me itch. Pretty sure. Any questions about what we did there? Okay.
So when we
Yeah, so it tells us, so the question is, how do we know basically which numbers to use? So what we're doing here is determining the indirect labor cost per unit. So the total indirect labor cost is $200,000. So that's how I knew that's what we were allocating, was the 200,000, because that's what we're asked to do. And it asks us here to use the direct labor hours as the allocation base. So that's why I used the 2,000 hours to get the $100 per direct labor hour. So the question is that really the best way? Does it give us the best sense of what our costs are? Is the indirect labor accurately split here when we split it 50-50 or assign the same cost per unit to both cell phones and tablets? Well, we know that their time is spent on setups. It tells us 30% of their time is spent on production runs. 70% of their time is supporting actual production, so that's more of a direct labor. The indirect labor is spent on these setups. And so the company says, maybe we should be using two separate rates, one for the setup part and the other for production support. Determine the budgeted activity cost and activity rate for the indirect labor under activity-based costing. Assume those two activities, one for setup and one for production support. So the first thing we have to do is take that $200,000 worth of indirect labor and determine how much of it is based on, or devoted to setup. And I just pointed out that's 30% of their time. And how much of it is based on supporting actual production, and that's 70%. So if the total cost is $200,000, and 30% of it is spent on setups, 30% of their time is spent on setups, then 30% of the cost should be based on setups, $60,000, 30% of the total. And the rest of it should be assigned to production support. So 70% of the total goes to production support. Everybody good so far? So I think it makes sense that the setup cost should be allocated based on the number of setups. We have 4,000 setups total right here, 4,000 setups. So $60,000 divided by 4,000 setups is an activity rate of $15 per setup. And the production support makes sense to allocate based on direct labor because it's actually related to that direct labor. These are the indirect labor costs, but they're supporting the direct labor, supporting actual production. So $140,000 of production support divided by 2,000 hours, $140,000 in indirect labor to support production divided by 2,000 direct labor hours. We're going to assign or allocate $70 per direct labor hour. Now we can allocate these costs. Rather than just splitting them 50-50, we're going to allocate setup costs and production costs separately. So we'll start with the cell phones. The cell phones have 1,200 setups, and we're going to charge them or allocate, assign $15 in indirect labor per setup. Then we're going to allocate the production support, 1,000 direct labor hours at $70 per hour. That's going to be the total. What we're asked for here is the per unit cost, and we're making 80,000 units. So make sure you find the total first and then divide by 80. About 80,000, I should say. And then we can do the same thing for the tablet PCs. We have more setups, so they're going to be allocated more of the cost of setups. Same number of direct labor hours, so they're going to be allocated the same cost for their direct labor. Sorry, for the production. So what do we see here? When we use just a single plant-wide factory overhead rate in Part A, we were assigning each product, the cell phone and the tablet PCs, we were assigning each of those the same cost for indirect labor, $1.25 per unit. That ignored the fact that tablet PCs have a whole lot more setups than cell phones do. And so we should be allocating more of the setup cost to tablet PCs, and that's what we did in Part C. Part B and C. We split the cost between the two activities and allocated them separately. And so the costs that we would allocate here in Part C are more true to the actual cost. As we've already pointed out, the total cost is still the same. It's still $200,000 in indirect labor. Switching to the activity-based costing would not by itself help us to reduce costs. The costs are still the same, $200,000. What we get from this is a better sense of the cost for each of our products. We recognize that tablet PCs actually take more of that indirect labor, that support cost. And so what would we do? We would price it higher. Make sense? Any question about those? Go ahead.
Yep. Sorry. Can you go over one more time how you got the activity rate?
Right here?
Yeah.
Yep. So we took the $200,000 in indirect labor and we split it between the two activities, setup and production, based on what they told us here. 30% of their time is on setup, 70% of their time is in production support. So we took the 200,000 and put 30%. We said that goes to the setup activity. The other 70% goes to production support. Well, we're going to allocate setups based on number of setups. So right here, we have 4,000 setups. If we spend $60,000 on setups and we do 4,000 setups, 60,000 divided by 4 is $15 per setup.
Okay, thank you.
Yep, and then for the production support, we're going to spend $140,000 on that, and we're going to allocate that based on direct labor hours of 2,000. So 140,000 divided by 2,000 direct labor hours is where the $70 came from. Other questions before we move on to our final part of this exercise and answer some questions? I need to clear my drawings, my writing on the screen so I can scroll down. Why are the per unit allocated costs in A, when we used a single plant-wide rate, different from the per unit activity cost assigned to the products in C? The per unit costs in A are distorted because setup activity is consumed by the products in a different ratio from the direct labor. The activity-based costing method properly allocates the setup-related activity so that the tablet PCs receive a larger portion of the setup activity cost because they use more than twice as much of that activity as the cell phones. The single rate system allocates overhead only on the basis of direct labor. Since the direct labor hours are equal for each product, the allocated indirect labor will also be equal. So just to summarize, it is possible that we could have gone through this whole thing and said, you know what, it didn't really change the cost, or it didn't really change them materially enough that it matters. And if we were to determine that, then we would not bother with the extra work that goes into using activity-based costing. But in this case, we can see there's a very clear difference. I know that 30 cents doesn't seem like a lot. Going from $1.25 down to $1.10, or going from $1.25 up to $1.40 doesn't seem like a lot. But as a percentage, it's a huge amount. It's a big difference. And when we're talking about 80,000 units being produced, that 15 cents becomes material. And so for this company, they may want to use activity-based costing because it avoids that product cost distortion and allows them to more accurately price their product and more accurately report on the profitability of each product separately. Even though 15 cents doesn't seem like a lot.
And that's 15 cents over 80,000 units.
Right. Yep. Okay, let's keep going. Any questions at this point? All right, let's keep going then. Exercise 8 says, Four Finger Appliance Company manufactures small kitchen appliances. The product line consists of blenders and toaster ovens. Again, we've got this simplified. This company has two activities, they have two products. The idea is if you understand how it works at that simpler and more basic level, you can expand this to apply it to a company that has 10 activities and 50 different products or whatever. They currently use the multiple production department factory overhead rate method. And so they're assigning costs based for assembly and for test and pack. The factory overhead is as follows. The direct labor information for the production of 7,500 units is as follows. So we can see for each one of the two departments, how many direct labor hours they're using for each one of the products. Four Finger Appliance use direct labor hours to allocate production department factory overhead to products. If required, round all per unit answers to the nearest cent. So the first thing we're asked to do is determine the two production department factory overhead rates. So for assembly, let me get for the assembly department, they expected to spend $186,000 on assembly. You can see that right at the top of my screen. And they expected to work 3,000 direct labor hours. Or $62 per direct labor hour. That's going to be your answer for the first one. Go ahead and try the test and pack department. Everybody okay with those? $62 and $40 per direct labor hour. Oops. Okay. And so now you can allocate the costs to each of the products. Start with the total. We have our per hour rates here for assembly and for test and pack. We entered those here. And then we're going to assign those costs to blenders and to toaster ovens. So for blenders, in the assembly department, it's 750 direct labor hours at $62 per hour. And in test and pack for blenders, it's 2,250 hours at $40 per hour. What I want you to notice before we go any farther is that blenders in total take 3,000 direct labor hours. I'm seeing that right here. Blenders, 750 plus 2,250. Total of 3,000 direct labor hours. Toaster ovens, total of 3,000 hours. So why not just split it 50-50? They each take 3,000 direct labor hours. If we used a single plant-wide overhead rate based on direct labor hours, we would just take the total cost and split it between the two products. The reason we don't do that, the reason it doesn't make sense to do that, even though it's easier, is because the blenders take 3 times as much time in the test and pack department as they do in assembly. And for toaster ovens, it's exactly the opposite. 3 times as much time in assembly as test and pack. Assembly is more expensive. That means the toaster ovens are more expensive to produce. If we use just the single factory overhead rate, we would miss that. We would mask it, we would distort the cost of the product, and therefore not really recognize that toaster ovens are more expensive, and so we should be charging more for them, at least as far as assembly and test and pack are concerned. We're not talking about the direct materials here, the direct labor. We don't have that information. But as far as the overhead part goes, the toaster ovens are more expensive. So we can go ahead, if you haven't already while I was talking, go ahead and do those calculations. Oops. If I were to add those two amounts together, I get two.
Actually, for
there.
blender I got 136.5.
Oh, I see. Yeah, yeah. Yeah, I see looking at I would have just figured that out because I would have said, oh yeah, that doesn't match. Thank you. What did you say it was, Seth? 136.5?
Yeah.
Yeah, I can see my calculator. Now that I have an actual calculator that I'm using, I can see that my calculator was turning off, so it missed my 7 because when I hit the 7, it just kind of turned it back on. Thank you. Now, if we were to add those two together, I get 306,000. So which is what it should be. We have fully allocated the cost of those two departments, assembly and test, which is test and pack, which is what we needed to do. So thank you, Seth, for pointing that out. I would have just figured that out and said, wait a minute, where did I go wrong? So we fully allocated the total factory overhead to the blenders and to the toaster ovens using the two departments. Now we can calculate our factory overhead per unit because it tells us right here that they expect to produce. These costs are based on 7,500 units of each product. So we're going to take the total for blenders and divide by 7,500 units, $18.20 per unit. And then we'll take the total for the toaster ovens and again, divide by 7,500 units to get the cost per unit. If we use the single plant-wide overhead rate, we would have taken the $306,000 and split it 50-50 because they take the same total number of hours. We can see now why that would not have been accurate, why that would have been a distortion of the true product cost. So if we were to just kind of think that forward, so what would happen? If we think that the blender is more expensive to produce, we're going to set the price higher than it really should be. And so what's going to happen for our customers? They're going to look at the price of our blender and say, that's a little steep, seems a little high to me. I might buy someone else's blender. And so we're going to lose some sales there because we didn't recognize our true cost. But what happens on the toaster oven side? We don't recognize our true cost. We set the price lower than it should be. People are buying our toasters, but guess what? We're not covering our costs, or at least we're not giving us the same profit margin we think we're getting because we didn't recognize the actual cost. So it's going to lead us potentially to sell more of the product that we're underpricing and less of the product that we're overpricing, and that's going to have a very detrimental impact on our bottom line. Everybody good so far? See why
Where
this-
did you get the factory overhead per unit? Like you did 75,000, right? But where'd you
Yeah,
get?
so
Oh, it's right there.
7,500. Yep,
I was looking for that.
yep, I had
Okay.
it scrolled off my screen. So,
I was looking too hard. Okay, 75,000, and then you just divide that
yep,
with the total
7,500.
factory overhead.
Yep, 7,500, not 5,000. Yeah, 750.
Okay. Yep, thank you.
Okay, any other questions before we move on? Okay, let me. So we have 15 minutes left. We may still get through both of these, which is great. I just want to skip ahead though to exercise 10 and just talk about this for a second in case we don't get to it. You should be able to complete exercise 10 on your own. It is simply using activity-based costing for a service company. We've pointed out we're going to be looking at that occasionally, even though our main focus is on manufacturing companies because they're more complex. I do want you to keep in mind that these procedures or these processes, these techniques that we're talking about frequently can just as easily be applied to other types of organizations, including service and merchandising companies. So if we don't get to this, you should be able to do this on your own, following the same steps, the same processes that we did in the last exercise, except the activity rates are already calculated for us. So you're simply applying these activity rates to each one of the two patients to determine their total activity cost. But let's go back to exercise 9. If we don't get to 10, you'll be able to do that on your own. Construct and interpret a product profitability report, allocating selling and administrative expenses. So what we've been looking at so far in this exercise, or excuse me, in this chapter, is different ways of allocating manufacturing overhead. So those are part of the product cost. What we're looking at here for the first time is period expenses, selling and administrative. These are operating expenses or period expenses. These are not part of the manufacturing overhead. These are costs that every single company would have, whether they're service, merchandising, or manufacturing. And so again, what you will be seeing in this exercise is that we can get a better sense of the true profitability of our products, the true costs associated with our products by using activity-based costing, not just for product costs, but also for period or operating expenses. Napier Incorporated manufactures power equipment. Napier has two primary products, generators and air compressors. The following report was prepared by the controller for Napier's senior marketing management for the year ended December 31st. So right here, this line, cost of goods sold, is the product cost that we have been learning about since chapter 15. That includes direct materials, direct labor, and overhead. What we see in this report, though, is that these selling and administrative expenses, right here, those period costs or operating expenses, are not divided up or allocated between the two products. Instead, we list them at kind of the overhead, not manufacturing, but the corporate kind of overhead. And so when we see the gross profit or gross margin from each one of these, it does not include those operating expenses. And it may be that those operating expenses are incurred not at equal rates between generators and air compressors. And so in order to know how did the generator division do versus the air compressor division, we might be able to use activity-based costing to divide up these expenses between the two as well. I'm just going back to reading what's in the exercise. The marketing management team was concerned that those $610,000 were not traced to the products. Marketing management believed that some products consumed larger amounts of selling and administrative expense than did other products. To verify this, the controller was asked to prepare a complete product profitability report using activity-based costing. The controller determined that selling and administrative expenses consisted of 2 activities. As we've already pointed out, do we really think there's only 2 activities this company does beyond making the product? Probably not, but we're simplifying it for our purposes. In a real world scenario, there's almost certainly more than just 2 activities, but the more complicated we get, the more work is required. And if it doesn't give us a better sense of our cost, there's no point in doing that extra work. The controller was able to determine the activity base and activity rate for each activity as follows. So they would have done exactly what we've been doing in those last exercises, separating the $610,000 into the part that is sales order processing and the part that is post-sale customer service. So they've divided the $610,000 into 2 pots. Then they decide what makes sense to use as the way to allocate sales order processing, and then what makes sense to allocate the post-sale customer service. They've taken the $610,000 and they've narrowed it down to these 2 activities. They identified the activity base. They divided the total dollars for each activity by the total activity base and came up with these numbers. $65 per sales order. And then the post-sale customer service, based on how many customer service requests do they get, we're going to charge them $200 per customer service request. The controller determined the following activity-based usage information about each product. You can see that generators had 3,000 orders while air compressors had 4,000. So if we're charging them or allocating $65 in cost per sales order, the generators with 3,000 sales orders at $65 each, we would allocate $195,000 in sales order processing cost to generators. The air compressors, total of 4,000 orders at $65 each, $260,000 assigned or allocated to air compressors. Total of $455,000 in sales order processing activity costs. It's the 4,000 sales orders right here. Oops, geez. 4,000 sales orders at $65 each. And then we can do the same thing for the post-sale customer service. Generators had less than half the number of service requests, and so they shouldn't be charged with as much cost. 225 customer service requests at $200 per request, $45,000 for generators. And for the air compressors, they had 550 requests at $200 each. We're charging them, we're assigning or allocating more cost to them because they use that service more heavily. If you were to add those 2 numbers together, the $455,000 for sales order plus $155 post-sale customer service, that will equal the $610,000 that we were trying to split between the 2 products.
Cindy?
Yeah.
So for I was writing notes on the first part. So for the post-sale customer service activity cost, you just used the air compressor and multiplied it by that 200. So
the 45,000 is for generators. So that would be 225 requests for generators at $200 each. That's where the 45,000 comes from. And then for air compressors, they had 550 customer service requests at $200 each. And that's where the 110 comes from.
Thank you.
Now, unfortunately here, they did not just carry down the numbers from up above. So the top part of this, revenue, cost of goods sold, and gross profit, is going to be exactly the same numbers from above. Okay, so I'm just re-entering those same numbers that we had up above. It says to enter all numbers as positive numbers, by the way, even though at the top they're shown as negative numbers. And so those first three lines are exactly just copying what we already had. We have already allocated the cost of goods, direct materials, direct labor, and overhead to the two products. What is new is what we just did in, scroll up just a little bit here, what we just did in this table. So we have our sales order processing cost for generators, $195, and for air compressors, $260, for a total of $455,000. And the post-sale customer service activity cost for generators, $45,000. For air compressors, $110,000, total of $155,000. Just adding the two lines above, sales order processing and post-sale customer service. And then the income from operations will be the gross profit minus the selling and administrative expense that we've allocated. And that number, the total income from operations, will match what's up above. We just now have a split of that total income from operations from the original report. We have it broken down between generators and air compressors. We're asked then to do the gross profit as a percent of sales. So you're taking the gross profit here, divided by the sales to get the percentage. And it says to round the percentages to 2 decimal places. It's the gross profit divided by the sales. Why it says to round to 2 decimal places. And then the last line is income from operations as a percent of sales. So you're taking the income line dividing by the sales line. There we need to round. We have 1 minute left in class time. So just to briefly sum up this exercise, if we had not done this product profitability report and allocated the selling and administrative expenses, we would have been looking at this line. Gross profit as a percent of sales. That we could have calculated in the original report. And we would have said, oh, generators and air compressors are equally profitable, 30% gross profit or gross margin on each product. But when we recognize that the air compressors use those services, the period expenses, more heavily than the generators did, it changes our view. It changes the information that we have. And we recognize that air compressors aren't as profitable because they do use more of those period expenses, selling and administrative expenses. Okay. Get my green check marks in there. Any questions about this exercise or anything from chapter 18? You said you should be able to complete exercise 10 on your own. And so I would be happy to answer questions about that by email, set up a office hours appointment with me, or just ask at the beginning of class on Thursday. But I'm not going to change the official due date for those exercises because we've covered everything we needed to cover. Yeah. Yeah, so we take this line, the income from operations, and divide by that's as a percent of sales. So we're dividing by sales. Where did this number come from? Is that what you're asking? So the income from operations is the gross profit minus the total selling and administrative. Any other questions before I stop recording? All right, well, thank you for being here.